What is going on, Savage Life family? Today I am going to be telling you what the safest stock is for options trading. Regarding options trading, I'm talking about either selling a cash secured put or selling a covered call. And that is obviously going to be Bank of America. All of you know Bank of America. I hope you will do. And if you do not know, it is one of the big four banks established in America. Founded in 1904 with a market cap of $206 billion. Now that is money for ages, basically meaning that this bank here, you don't have to worry about going bankrupt. You don't have to worry about this bank going bankrupt, because if this bank here goes bankrupt, then the economy as a whole has failed in itself. So we're gonna go ahead and click on the options here. As you can see, let's say we were going to sell a put and the price is at $23.76. This is a little too close to expiration since it is the 27th. So let's say we will be doing it for the 6th. It will be expiring next week on Friday. This here is honestly a phenomenal price to have Bank of America at $23.50. And for this alone, you will be receiving $55 for selling a put on Bank of America. Now, it might be low to a lot of you guys who do a lot more riskier stocks like Workhorse, of course, but this here is stability, ladies and gentlemen, so you do not have to worry about the value of this company tanking completely. And if you were to end up with this company at $23.50, which is an amazing price, you would go ahead and over here look at the cause. November 6th, $23.50. It obviously wouldn't be 92 since the share price is above this. It would be around this range here, $66 range. But as you can see, it is passive income here for Bank of America. And what I wanted to show you about this company here is over the past 5 years, you can see how little volatile it is compared to a lot of its competitors like Wells Fargo. You see it rests between the $20 and $30 price range, and in the past month alone it has not gone below a $22 price point, which is phenomenal. This is a whole month of passive income trading, and Bank of America is doing well so far. If you want to see other people staking really big on Bank of America, look at, we all know who Warren Buffett is. He plowed $5 billion into Bank of America at a 5% premium within the next 10 years. So he definitely has high hopes for this company, and he has big trust in the company to be able to stake $5 billion. So if someone's willing to put $5 billion into a company which has our country's name in it, I definitely don't have a problem earning passive income trading options on this stock. Now, this isn't what I wanted to show you mostly, but before I look at a stock to trade options, I go on Thinkorswim here and I analyze the balance sheets, the earnings, and the valuation of the company itself. Now, if you check here, the PE ratio last quarter, which was filed on the 30th of June, for this company is 11.64, and typically the average PE ratio ranges from 20 to 25. If it's over that, it means it's either overpriced or has high expectations, which has a higher risk. And if it's lower than 20 to 25, it means it has great earnings and it is a safe stock to invest in. A lot of people don't really go by the PE ratio, but when you're putting this much money into a company, you want to look at everything behind the company. So the average industry's PE ratio is 13 for the banking regional industry, and they are at 11, so they are lower than the average PE ratio, which is of course a good thing. And more importantly than the PE ratio, me personally, is this price per book value ratio here. And it is calculated by dividing a company's stock price by its book value per share, which is defined as its total assets minus any liabilities that the company has. So typically you want to look for a price per book ratio that is currently under 1, and their price per book ratio is at 0.85, which is amazing. This company does not have any long-term debt issues and has been operating fairly above water for the past 5 years. Now, typically when you trade options and you end up with the stock, you want a stock that does pay dividends just in case for the long run. End up holding on to the company. You want a stock that pays dividends as well as premiums for the options because they hold more value. So there you have it. Bank of America will be holding about more than 60% of my portfolio will be dove into Bank of America for trading options for passive income. I want to know what you guys think below in the comment sections. If you have any questions, drop it down below. And for more videos like this, be sure to smash that like, subscribe, and on to the next one. We out.